Well, hello everyone, and thank you for joining us for the Caribbean Economic Outlook 2018 with Marla Dukharan. This is Marla's 5th annual Caribbean Economic Outlook webcast, and it's our pleasure to have you here with us today. I was just right before the recording started and the webcast started. I was just looking through the webcast that we did for 2017, and it's really interesting to see how many of those risks that Marla pointed to actually played out. And so I'm really excited to hear what Marla has to say today, and I know that we all want to pay very close attention to this. So without further ado, Marla, I'm going to go ahead and turn the mic over to you so you can tell us what you see coming in the next 12 months.
Oh, thank you so much, Melissa. Has it been 5 already? Wow. So this is the 5th economic outlook, Caribbean economic outlook, as Melissa just said. It really is fun to do this, and I hope you all enjoy it. I hope that it adds value to you as you plan for 2018 and put things in place even for 2019. So as usual, I'm going to run through what's happening in the global economy and drill down to what's happening in the wider Caribbean territory. And there are a few countries that I will run through individually: the Bahamas, Barbados, Cayman, Jamaica, Trinidad and Tobago. And I'll share with you my final thoughts at the end in closing. So first off, in terms of what's happening in the global economy, well, as we know, according to the IMF, if global growth is below 3%, the world is considered to be in a global recession. And interestingly, the IMF put out their annual forecasts just following their or during their annual meetings in October. So they did projections until 2022. And interestingly, we are not going to see global growth according to the IMF projections. We're not going to see global growth up to getting up to 4% or exceeding 4% well until 2022. And what that means to me is that we're going to continue, as you would see in the kind of yellow shaded area in the chart. Growth is really not going to move significantly above 3%. For quite some time. This is global growth I'm speaking of here. And that suggests to me that global growth is still vulnerable. There are risks that are overweighted to the downside, meaning that should there be any shock, it is likely that the global economy can fall back into recession, into the 3% or sub 3% territory, because we're not meaningfully above 3%, and we're not expected to get even to 4% at least until 2022. And this is, we are like 10 years now after the global financial crisis. And so when you look at this, you can't help but ask yourself, why after so long, after that big V you're seeing in the chart in 2009, the crisis really started in 2007. As you can see, the global growth started to dip in 2007. We're now 10 years following that initial onset of the global financial crisis. And, growth is still struggling to be meaningful on the global scale. And you have to ask yourself why. What really is wrong? And we know that collectively there was a massive policy response, unprecedented policy response to the global financial crisis on the part particularly of central banks globally, the Fed, the EU, Japan, and really it was unprecedented levels of printing of money, and this monetary stimulus, which was at unprecedented levels, is what drove the global economy back out of recession, as you can see from the chart, in somewhere around 2010. But growth has faltered since then. It hasn't really maintained an upward trajectory. It declined sharply again after 2010, and it's kind of hovering around just over 3%. There are many theories as to why this is. People talk about automation, people talk about productivity, wage growth being too weak, etc., etc. My own view is that the level of inequality, which is the worst in 100 years, is what is driving this very, very low and almost recessionary level of growth. Because we have a situation where 1% of the world's population owns as much wealth as 99%. Just 8 men on the planet own as much wealth as the poorer half of humanity, as many as 3.6 billion people, right? 8 men own as much wealth as 3.6 billion people. And what this is testament to is that all of this monetary stimulus that went into the financial system and into the economy after, as a result of the policy response to the global financial crisis, all of this liquidity just drove asset prices up. And that, in driving asset prices up, what it did was it inflated the value of the portfolio of the wealthy, who are the ones who hold these assets. And this is, to me, testament to the fact that really trickle-down economics does not work very well. Beyond a certain point, I think it doesn't work. And so you have much more wealth accruing to the wealthy than you see spreading. And you've heard, the thing is, you hear the G20 and you hear the policymakers at Davos and at the IMF meetings responding to this with the requisite shock and horror for political correctness, saying that growth has to be inclusive, and unless it's inclusive, you will continue to get the political upsets that we are seeing in the past 2 years, for example. But there is no policy response to assure that the growth is inclusive. There is no policy response I'm seeing collectively anywhere that addresses this situation. And so what I think will happen is that you will continue to see inequality worsen. As a matter of fact, the taxation amendments that we are seeing coming in the US are actually going to make that inequality worse, because it puts more liquidity, more money in the hands of businesses and business owners, in the hope or in the theory that they will hire more and produce more. But we've seen for the past 10 years that really has not materialized. And so I believe this inequality will continue to get worse. I believe we'll continue to see the kind of political upsets that we've been seeing for the past couple of years. And I believe that growth will continue to suffer on a global scale. And so we can, the new normal that will exist globally, as well as for us in the Caribbean, will be basically colored by this overall trend. And so speaking about the Caribbean, the outlook for the Caribbean's long-term growth and development is actually weakening. According to the IMF, growth in the region has stalled since the year 2000, generating few jobs, and also, well, we've seen high levels of unemployment as a result. The global financial crisis had an especially strong effect on the unemployment rate for those within the 15 to 24-year age group, which the unemployment level for that age group jumped by 5 percentage points between the years 2007 and 2013, up from 21% on average to 26% on average for Caribbean territories. And related to this, we're seeing the fact that crime has risen sharply since 2004 in the region, and murder rates are now among the highest in the world. More specifically, violent crime in the Caribbean is significantly higher than in any other region, with 6.8% of the population in the Caribbean affected versus a world average of 4.5%. About 40% of the Caribbean population identifies crime and security-related issues as the biggest problem facing their countries, even more so than poverty or inequality. And if crime is the biggest problem in the Caribbean, followed by poverty and unemployment, think of the spillover effects of that of Venezuela's crisis, the effects that it's already having, and the effects that will, I believe, continue to get worse before it gets better. According to the IMF report last month, Venezuela is in the midst of a full-blown economic, humanitarian, and political crisis with no end in sight, with real GDP projected to fall by 35% in the period 2014 to 2017. And the economy is headed towards hyperinflation. We know it's already there. The main risk to this region, in my view, relates to the humanitarian crisis and the ensuing migration of Venezuelans to neighboring countries, especially Suriname, Guyana, Trinidad, and some of the Dutch islands like Curacao and Aruba. Last year, the United Nations estimated 40,000 Venezuelan migrants were living in Trinidad and Tobago alone. And the illegal movement of arms, weapons, and humans has had a noticeable impact on crime in Trinidad already. And finally, but of course, by no means minimally, there is the health risk. With poor healthcare and very few children being immunized properly in Venezuela, the rise of communicable diseases such as diphtheria, yellow fever, malaria, even diseases like polio that we had eradicated in some parts of the world, the rise of these diseases is especially acute in Venezuela, where there's a significant proportion of these citizens being classified as malnourished and are not getting proper health care. When they come into our territories, even though we in the Caribbean are proud of some of the human development, health especially indicators that we have been able to achieve, this is an immediate threat to eroding some of those gains that we've made. And I believe that Venezuela and this health-related risk is growing for the Caribbean, and again, not being acknowledged and not being addressed by the policymakers. So overall, the outlook for the Caribbean is improving for some countries, but not uniformly. You would see from the chart, we had average growth of about 3.4% in 2016. And this was actually projected by the IMF to fall in 2017. Now, I don't think that their figures have been fully adjusted as a result of the hurricanes that passed during the hurricane season. But pretty much they're projecting growth to basically around 2.8% in 2017. Down from 3.4% in 2016. I quite expect them to revise these down yet again. Tourism-dependent economies expected to, between 2017 and 2018, expected to grow at 2.4%, up from 2.1% in 2016. Again, this is, I think, before, these projections were before they amended for hurricanes. But for the commodity exporters, growth is projected to rise in 2017 and 18 from the 1.3% we saw in 2016 to 1.3% from the negative 3.3% we saw in 2016. But of course, there is substantial variation across countries. The Dominican Republic, as you would have seen in the previous slide and this slide, continues to be a very strong outlier and is the strongest growing economy for, I think, next year will be 5 years, 2018 will be 5 years, strongest growing economy in the Caribbean and Latin America. And the rest of the Caribbean, well, Puerto Rico at the bottom there, of course, that is a result of the hurricane. Barbados, this projection here is from the IMF, but I suspect Barbados might have some significant challenges next year. We have, and I'll talk about that later when I get to Barbados, but you know, there is an election and there is possibly a balance of payments crisis brewing there. Trinidad, my guess is zero growth next year. That's my estimate, my projection. There is a positive growth projection from the IMF, but I just want to say that I don't believe that we can really register meaningful positive growth next year in Trinidad with the kind of fiscal correction that we need to have, with the kind of foreign exchange issues that we continue to have. So my projection is really for zero growth, as you would see in the chart. So with respect to, I mentioned earlier, the hurricanes, But I just wanted to spend a little time sharing with you some of the details about how bad this damage is to the Caribbean, how bad it has been for many years. The latest World Economic Outlook from the IMF had revealed some startling statistics and reported that tropical cyclones caused damage of $548 billion worldwide for the first 14 years of this century. In other words, from the year 2000 to the year 2014. Not surprisingly, these tropical cyclones have had a significant negative effect on GDP, with the largest effect being felt in small island states. The IMF estimates that in small states, even 7 years after an average storm strikes, and that is not a category 5 or 5 plus, an average storm, 7 years after an average storm strikes, GDP per capita is still almost 2.5% lower than if the storm had not happened. 7 years after. They further found that the effects are very persistent, and even after 20 years, the economy still has not recovered from the shock. And to me, there is no wonder that poverty levels are rising and development outcomes are weakening in the Caribbean as a result of this. And we are already estimated by the CDB to have 1/3 of our population is already multidimensionally poor. And according to the World Bank, many families are just one natural disaster away from falling into poverty. So when you look at this and you see the kind of long-term damage and long-term effects that one hurricane can have, and you match that or you line that up against policymakers that suffer from short-termism, that suffer from a time horizon that does not extend beyond the next election, you see why in the Caribbean we are not making the kind of progress we need to make and the kind of progress that Caribbean people deserve. And so the next slide, I wanted to just share something with you about the fact, well, we hear all the time that we are, the most indebted region in the world. But I wanted to just highlight the fact that we have this misconception in the Caribbean and in many parts of the world, but especially acute in the Caribbean, that the government needs to spend in order for the economy to grow and for jobs to be created and for lives to be improved. Most people believe that to be the case. However, I wanted to share with you that empirical studies have shown that because of the fact that we have a high propensity to import, and as a matter of fact, 80 to 90% of what we consume is imported, we suffer from low fiscal multipliers in this region, and some countries like Guyana and Barbados, according to the IDB, even have negative fiscal multipliers. What that means is of every dollar that the government spends in the Caribbean, less than $1 ends up adding to the GDP, being added to GDP. So fiscal spending is not a significantly it's not the best solution to grow the economy and for progress to be made. In fact, what ends up happening, and this chart is showing you where we lie, most of us in the Caribbean, along the spectrum of the level of indebtedness. What research has shown is that if you have a level of debt to GDP of around 55 to 56% or greater, every additional dollar of debt actually causes GDP to contract. The relationship between debt and GDP becomes negative. Above 55 to 56% of debt to GDP, you have a positive but diminishing effect. The effect starts to diminish when you cross somewhere around 30%. But most of us are well beyond the 55, 56% debt to GDP. So this is yet another reason why more government spending does not add to GDP. And so whenever you're faced with a choice at the polls, whenever you have to listen to your policymakers talk about the policy solutions that they want to implement if they were elected. When they say things like, we need to spend more money to create jobs, and we will spend more money to make your lives better, just bear these things in mind, that most times it's either a misconception or it's really just a poor policy response, poorly constructed and misconstrued policy response that is going to end up doing more harm than good. What really we need in the Caribbean is more investment spending. We need more export-driven investment, and we need private sector-led growth, and we need the governments to be able to facilitate private sector-led activity rather than just spending on their own. So that's just my contribution there to tell you all a bit or two about what I think is wrong with and why in the Caribbean we're not getting the progress we deserve to get. Now, going to the Bahamas economy, I was quite pleased when I was in the Bahamas in November of 2017. I was quite pleased to see the progress that's being made in the Bahamas with respect to fiscal, basically fiscal consolidation that is much needed in the Bahamas. I was quite pleased to see that this new government is taking steps to address some of the corruption that would have been committed, and holding people accountable. That kind of stance and that kind of activity, I'm so proud to see the Bahamas current government doing that, and I think we need more of that. I mean, certainly in Trinidad, I would love to see that level of accountability being held. But anyway, the worrying thing I'm seeing in the Bahamas is the fact that you're seeing stayover tourism numbers declining. Now, some of that had to do with Hurricane Matthew, as well as so that was Hurricane Matthew was in 2016, and then as well the hurricanes that we had in 2017. So their stayover arrivals were down 6% in August year over year. In August of this year, down 6%. Total room revenue down 7%. Occupancy fell 5.5 percentage points to 70.7%. And average daily room rate dropped by 2.6%. Cruise arrivals are virtually flat. Unemployment fell as a result of the onboarding of some of the Bahamar employees and the rebuilding effort for Hurricane Matthew. But this lower tourism number is quite concerning for the Bahamas. Now, we have a projection for higher growth next year, 2.5%, that higher than we've seen in 2017. But according to the IMF on the Bahamas, a prolonged period of stagnation has resulted in declining income relative to neighboring countries. The IMF is expressing concerns about fiscal sustainability and a severe household debt overhang problem. According to the IMF, elevated public debt, limited external buffers, and a pegged exchange rate regime continue to constrain the policy space to respond to shocks. A stronger US economy and the opening of Bahamar are expected to lift real GDP growth to 2.5% in 2018, but potential growth remains low, reflecting structural impediments. A new administration, has pledged a strong commitment to revive growth and restore fiscal accountability and fiscal discipline. I'm very happy to hear that and to have seen evidence of that in the Bahamas. And according to the IMF, the legacy of the last administration remains. The central government fiscal deficit is estimated to have reached 5.7% of GDP for the fiscal year ended June 2017, which is almost double what it was in the previous fiscal year, due to sharp increases in the wage bill, post-hurricane cleanup and reconstruction spending, temporary tax reliefs, and disruption to revenue collection. Of course, this was also in run-up to the general election. The central government debt to GDP ratio is estimated to have increased to 73% of GDP in fiscal 2017, although the central bank reported national debt at almost 79% of GDP, because apparently there was a revision. According to the Department of Statistics, various changes were introduced to major data sources for the years 2012 to 2016, and on average, these revisions increased nominal GDP by 19.9, almost 20%, and increased real GDP level by 25%. Due to these changes and the revisions to the statistic, the level of GDP has since been revised upwards, causing the debt to GDP ratio to decline. However, these revisions have caused the growth rates to look weaker. So we have an average growth rate for the Bahamas from 2013 to 2016 of negative 2.35%, an average contraction of 2.35% from 2013 to 2016. So you see what an uphill battle the Bahamas is facing. Given the proceeds from the government's foreign currency borrowing, reserves have strengthened to just about 1.2 billion in October, which I estimate at around 3 months of import cover. The outlook for the Bahamas, according to the IMF and according to what I see as well, is positive, mildly positive, contingent upon the government's much needed fiscal consolidation efforts and a recovery in tourism. If the US economy continues to be firing on all cylinders, we should continue to see tourism numbers in the Bahamas hopefully improve in 2018. Of course, once we don't have the kind of weather disruptions that we did in 2017. So overall, a positive outlook for the Bahamas, I would say. Now, with respect to Barbados, so the IMF put out a release not too long ago saying that following growth of 1.6% in 2016, Barbados is now projected to grow by less than 1% in 2017, this year, and inflation is going to rise to 5.5% in 2017, up from 3.6% in 2016, based partly on higher taxes, especially the NSRL. And I'm hearing quite a bit of that in terms of the effects people are seeing in the prices going up at the supermarket and so on. Reserves continue to decline steadily, and you would see that on the chart here, reaching the lowest level in this century in September, roughly $275 million US, estimated at barely 2 months of import cover. Now, 2 months of import cover for a country that is heavily import dependent, like we all are in the Caribbean, is a very, very delicate situation. And much of that pressure on the reserves is, of course, coming from the central bank financially supporting the government by printing. Now, what I wanted to highlight was that in the IMF's recent release, they said that the central government debt has risen to about 135% of GDP. This is central government. And they reported improvement on the fiscal deficit declining to 5.5% of GDP, but it is unclear whether arrears have increased as a result and to what extent. If you have a deficit of 5.5%, but you have racked up arrears of, let's say, yet another 5%, then really your deficit is 10%. And so that's the big unknown. And that's what the government of Barbados has been doing for a few years well. The IMF has recommended for Barbados an overall balanced fiscal budget, not incurring any further arrears, of course. And they have recommended a primary fiscal surplus of 7.5% of GDP. Now, I am saying to you that not if, but when there is an IMF program, which I suspect will be in 2018. This is my projection for Barbados. This is the kind of primary fiscal deficit target that the IMF will set. 7.5% of GDP as a primary fiscal surplus target in order to put the debt to GDP ratio on a downward trajectory. Now, just to put that into context, because I know some of you will be thinking, what is the significance of a primary fiscal surplus of 7.5% of GDP? So let me just share with you that right now, Jamaica, which has the most austere budget of any sovereign on the face of this earth, has a primary fiscal surplus of 7.7% of GDP. Their target was 7, they realized 7.7. So in other words, the IMF is going to prescribe austerity package that will make Barbados's budget one of, if not the most austere on the planet. Just by way of comparison, Greece's primary fiscal surplus target is about half of that at around 3.7% of GDP. And that is what it will take to put the debt to GDP ratio on a downward trajectory. And I've said this before, but I will say it again. Yes, we have an election coming up in Barbados. I think the Prime Minister said it will be in June of 2018. And I will say that I would be pleasantly surprised if they are able to prevent a balance of payments crisis happening before the election. But I quite expect that there will be an IMF program which will involve austerity, as I just outlined. And I think it matters not too much who is in power. Because if you have a balance of payments crisis and you have to go to the IMF because you cannot afford to pay your foreign currency bills, then your policy agenda is then, even though we call it a homegrown program, it is, yes, it could be deemed homegrown because the local policymakers are the ones who make the final decision, but really your policy options are fairly limited and fairly straightforward, okay? And so I think it matters not too much who is in power. Where I think it matters is with the execution of the policy measures. And I have a concern around execution, not just in Barbados, in other countries as well. And I wanted to share with you finally this chart on the level of money supply, ratio, sorry, of the money supply to international reserves. So the monetary base increased by 7% year over year in August of 2017, and it has slowed a little bit. The pace of increase of the monetary base, meaning printing, has slowed a little bit, but the reason for that is because, of course, the central bank raised the reserve requirements, so the commercial banks are forced to hold more government paper, and therefore the commercial banks are being forced to lend the government more, so the central bank doesn't have to, right? And so if you have a monetary base of around 8.6, the ratio between, the level of international reserves and the monetary base is now about 8.6 to 1 in September of 2017. And again, there's continued deterioration in that ratio. And of course, this is by no means a reflection of what I think the exchange rate should be, could be, or will be. I'm just saying that this ratio gives you an idea of how much pressure there is on the exchange rate and how unsustainable it is if the central bank continues to print and if reserves continue to fall. And so my projection for next year is that 0 to 0.5% growth seems fairly reasonable to me. There will be an initiation of an IMF program next year. And there, of course, we know there will be an election. This is all my 2018 projections for Barbados. If they iron out an appropriate front-loaded and reform-based program the way Jamaica did, and they adhere to it and execute it well the way Jamaica did, in a few years' time, 3 to 4 years' time, Barbados can see a meaningful recovery the way Grenada has and the way Jamaica has. It's not the end of the world, and I don't want listeners to feel that it's all doom and gloom. I actually think that beyond 2018, things will look a lot better for Barbados. And so my favorite economy in the whole Caribbean, the Cayman Islands, which of course, in my view, is the best run economy in the whole Caribbean, because strong leadership, fiscal responsibility, and private sector led growth. This is what basically are the major ingredients in the Cayman Islands. They have a growth forecast of around 2.1% for 2017, led by construction, business, and other services, and the finance and insurance industry. They are seeing 16 consecutive quarters of growth, averaging 1.6% year over year for the last 25 quarters. And this is alongside a fiscal surplus. The government in Cayman Islands generates a fiscal surplus. And so the point I was making earlier is being well validated here. You do not need high levels of government spending. You do not need deficit spending in order to generate growth. The Cayman Islands has generated a fiscal surplus since 2013, averaging 3.4% of GDP for the last 4 years. And alongside that, they've had 16 consecutive quarters of growth. Growth is now around 2%. Average annual inflation around 2%. After right now, but in 2016, it was less than 1%. Central government debt to GDP was down to 16.5% in 2016. And is continuing to decline by about 5%, year on year in the first quarter of 2017. How much better than that can you expect? They're showing growth in their stayover arrivals, up 6% year over year in October of 2017, but cruise arrivals were down 5%. I wouldn't worry too much about cruise arrivals. We know that they're not very high revenue earners, and well, there isn't a cruise terminal in the Cayman Islands, so it makes things a little difficult. They have to get off the ship and be shuttled with smaller vessels and so on. But it was the highest on record, highest October on record since 2006, and its first stayover arrivals, October again was the highest on record. So doing well, Cayman Islands on their tourism statistics. I'm very, very happy to see how their economy is performing. Another one of my favorites, the Jamaican economy. Like the Cayman Islands, Jamaica has also recorded positive growth, despite having the most austere budget, as I said, on the planet, with a primary fiscal surplus of 7.7% of GDP. Jamaica recorded 10 consecutive quarters of growth, led by the services industry. Goods producing industry, however, has been impacted by declines in bauxite output and climate effects on flooding, for example, on their agricultural output. Inflation has intensified to 4.7% in October of 2017. The stayover arrivals for Jamaica are up 6% year over year to September of 2017. Cruise arrivals up 9% year over year to September 2017. For the first half of this year, Category 1 crime fell by 4% year over year. However, the murder rate rose 20% year over year for that same period, for the first half of 2017. Unemployment in July was 11.3%, down from 12.7% in December of 2016, and down as well from 1 year prior, which is July 2016, when it was almost 13%. Now it's down to 11.3. With respect to international reserves, we saw reserves climb about 26% year over year in October to just over $3 billion US, which was partly based on borrowing, but which equates to now 23 weeks of import cover for Jamaica. And with respect to the currency, we see that the Jamaica to US dollar exchange rate is quite stable, with depreciation averaging 1.6% year over year in the third quarter of last year. For 2016, the average monthly rate of depreciation was 6.5%. And actually, the Jamaican dollar appreciated month over month for 5 of the first 10 months of 2017. The exchange rate reaching just around 128 Jamaican dollars to 1 US dollar. And part of that has to do with, of course, the growth in the economy, confidence in returning to the economy, confidence returning to the currency, FDI inflows, stronger reserves, and even this exchange rate is fairly market based relative to, say, Trinidad, which is all policy based. Now, speaking of Trinidad and Tobago, so growth has averaged 0 pretty much since the global financial crisis in Trinidad and Tobago. And while people debate whether we are in a recession, my view, which I have said before, is that we are in a stagnation, not a commodity-driven recession. And that's based on the deep structural weaknesses we have in the economy. These are the projections. Now, the projections you're seeing there for 2018 and 2019. The 2019 is really a best case scenario. Again, as I said earlier, I believe next year we would pretty much see 0 growth or close to 0 growth in Trinidad in 2018. Again, the Trinidad and Tobago dollar is the single most overvalued in the entire Caribbean and Latin America. In the competitiveness index released in 2017, foreign currency regulation moved up 1 spot, surpassing crime and theft to become our nation's 4th most problematic factor in doing business. So can you imagine that Trinidadians who were polled, who were surveyed for this index, now deem the foreign exchange problem to be an even bigger problem than crime, when we have a murder rate of close to 500 persons for the year, right? The FX, the foreign currency regulation is a bigger problem than crime, seriously. And I think this is not an exchange rate issue, but a supply issue. As the IMF has stated in their staff report, queues for foreign exchange appear to be of macroeconomic significance due to the delays in obtaining foreign currency for current imports and for debt servicing. Since December 2014, foreign currency deposits have grown from 26% of total deposits to 30% of total deposits in July 2017. This suggests that there's been some flight to quality and higher speculative and or precautionary demand for US dollars. So we're holding more US dollars on deposit in Trinidad and Tobago. This also suggests that Trinidad and Tobago is becoming increasingly dollarized. Now, while dollarization in and of itself is not a negative development necessarily, if it's predicated on a deterioration of confidence in your currency, however, this can present long-term challenges, just think about what has to be done in terms of the reforms necessary to restore confidence in your currency after the kind of dollarization that we are seeing taking place, where more and more transactions are taking place on US dollars and more of the deposit base is being held in US dollars. That, I think, is a significant risk we're facing in Trinidad. The IMF stated in their most recent report that the TT dollar is 24 to 49% overvalued, meaning that $1 should sell for anywhere between $8.34 TT to $10.13 TT to $1. I think this is, and you would see here on this chart, the fact that despite what the Minister of Finance said about in reintroducing variation in the rate, despite the announcements he made in the past about where the rate is going to be, we see that it has flat lined. There is almost no movement in the exchange rate. And we have an exchange rate that is almost 25 to 50% overvalued. How could this be an accurate and relevant policy response? I really am completely baffled by this. My final thoughts are that in the Caribbean, risks are elevated because of the kind of political response, policy responses we're seeing, particularly in the US with respect to treatment of foreigners, with respect to the taxation, with respect to cutting of funding for certain overseas programs and aid and so on. With respect to Brexit, you would see, we've seen effects in Barbados and there's some possible effects on Jamaica, but I think it will be fairly muted, especially for Jamaica. But there are implications for trade, currencies, commodities, tourism, growth. My one major risk that I'm seeing, apart from Venezuela, which I talked about earlier, the major risk I'm seeing for the Caribbean, apart from Jamaica and apart from the EC, the Eastern Caribbean, is the fact that in all other countries, we're seeing weaker foreign exchange reserves. So I'm guessing that weaker foreign exchange reserves means that the risk of devaluation for certain countries is increasing. On the positive side, we have strong growth in the US and the Canadian economies, and that generally means that tourism numbers could improve, depending, of course, on the weather and hurricane and other crises that we see. I think also the way in which Venezuela can negatively affect us indirectly is when other countries like the source tourism countries like the US, Canada, and the UK, if there are any news or press reports about, for example, diphtheria, which has risen in incidence significantly in Venezuela, which is highly communicable. If you have any incidents of these kinds of diseases being reported in the Caribbean, just like we had with chickpea, you can get a response where these countries announce to their citizens and residents that you have to exercise caution coming to the Caribbean because of these communicable diseases that you can end up succumbing to. So that's one of the things I'm concerned about in 2018 as well. But in general, I am more optimistic about some countries than others. The ones I'm more optimistic about are, for example, Jamaica, the Cayman Islands, Guyana, parts of the Eastern Caribbean, Bahamas, except, of course, we talked a bit about the fact that their tourism is suffering as a result of some of the post-hurricane effects, sorry. But I'm less optimistic about other countries, Barbados being the major one, not so optimistic about Trinidad, even though like I'm expecting us to move from negative growth to probably around 0 growth. Suriname, I'm a little more optimistic about, but not terribly optimistic. I will continue to update throughout 2018. I quite look forward to engaging more with people who need this kind of information. My tribe, as I like to say. Very open to feedback and questions from all of you as to what are some of the things you would like to hear discussed. But I'm looking forward to having more and more discussions around some of the major issues affecting us in the Caribbean, because I'm quite concerned, quite frankly, I'm very concerned for some of us in terms of our poverty and development outcomes, and the fact that I think for most of us, things are not going in the right direction from a macro perspective. But anyway, thank you for your time and attention. I'm looking forward to hearing from you, and I'm looking forward to engaging more with you in 2018. God bless. Take care.